Hello, and welcome to the Agile CFO Leadership Forum, FP&A Frameworks for Success. My name is Michael with Agile. It's great to have everyone joining us today. A couple of notes before I turn things over to our panel moderator. First, a quick reminder to stop by our sponsors' virtual booths at any time during today's event and for the following week. Our partners are committed to providing you with valuable content and a great overall experience. At any time during today's event, you can visit the virtual booths from the main agenda page, which include complimentary materials and information. For those seeking CPE credit today, you must answer at least 3 polling questions and remain on the session for its duration. Polls can be found under the Polls tab on the right-hand side of your console next to chat. Afterwards, if you are eligible to receive credit, you will receive an email with a link to your certificates. If you have any questions on credits, please email cpe@argyleforum.com. Now, to ask questions throughout the session, simply type into the Q&A chat and we will address your questions at the end of the session. Also, be sure to subscribe to Agile on YouTube for exclusive access to all our past events. And now, without further delay, I'd like to introduce our moderator, Keith Neal, Executive Vice President and Chief Financial Officer with Advocates. We are excited to have Keith and our panelists for a panel discussion titled The Future of FP&A, Building Agile, Insight-Driven Finance Organizations. Keith, thank you so much for being here today. Welcome, and over to you.
Thank you very much, Michael. So good afternoon, good day, everyone, and welcome to our panel discussion on building an agile, insight-driven finance organization. We have a great panel lined up for you today. So let's jump right in with introductions. Again, my name is Keith Neal, and I'm the Executive Vice President and Chief Financial Officer at Advocates. Advocates is one of the largest nonprofit health and human service organizations in Massachusetts, providing comprehensive services for people facing developmental, mental health, or other life challenges, serving over 40,000 individuals and families each year. Now I'll call upon our panelists to do a brief introduction. So why don't we start with Teddy?
Hey everyone, my name is Teddy Collins. I'm the EVP of Finance at SeatGeek, an online ticket marketplace, where I lead corporate FP&A, treasury, and investor relations.
Great, thank you, Teddy. Let's go over to Peter.
Hi, afternoon everyone. My name is Peter McKenzie, and I've been a senior financial leader for about 25 years. I worked at Citi for 20 years and then spent a couple of years with Apollo, which is a private equity firm, and the last almost 11 years with Blackstone, which is the world's largest PE firm. So I've had various roles between CFO, COO, and I'm currently the general manager at the real estate firm that's owned by Blackstone. I'm also an executive coach. I coach finance leaders in how to build their executive presence and communication skills.
Great, thank you, Peter. And then rounding out our panel today is Lucas.
Hey everyone, pleasure to meet you all. Great to be here, great to be with the panelists. My name is Lucas Groke. I'm originally from Brazil, now in Chicago. Moved here a couple of years ago to pursue my master's with the University of Chicago. And I've been a financial professional for 14 years now. First 10 basically in banking, now in the past 3 to 4 years doing mostly corporate finance. I've been serving the past couple of years as the financial lead for the global growth org of one of the largest CPG companies here in the US. You all know it. But as I said, my background is in banking. I did most food and agriculture sector coverage for capital markets teams and trading teams in Latin America, in New York, and now in Chicago. Very happy to be here and talking with all of you today.
Great, thank you, Lucas. So we have a very well-rounded panel today. So we'll just jump right in and we'll try and save about 5 to 10 minutes for our Q&A at the end. So if you have questions as we go along, please feel free to add them into the chat. So with that, we'll get started. So I think it's fair to say that today the demand for better, faster, near real-time information has never been higher or more important. Whether your company is big or small, being able to identify trends, risks, and opportunities can really make the difference between struggling, just getting by, and thriving. So to kick off the discussion, I'm going to turn to Lucas to get us started here. So Lucas, kind of keeping that in mind, how do FP&A teams and professionals balance the need for faster forecasting and planning cycles while still really maintaining a high level of confidence in the numbers and the data that FP&A is providing?
Yeah, I think like that's and I think it from my team and throughout my on shifting a mindset from a more detail-oriented forecasting to a more decision-useful-oriented forecasting. So, and I would organize this shift in basically 3 principles we had to adopt in the past number of years to be efficient on those. The first one is to focus specifically on a few drivers in the forecasting cycle that actually move the business, rather than trying to reforecast every single line that we have on the same level of detail. The second one was to separate what we call the forecast speed from the forecast control process. So we had to make sure that we have one single source of truth, standardized definitions, a clear ownership of assumptions, where basically confidence came less from spending 6 extra weeks polishing the forecast and more about knowing exactly which assumptions changed and who owns them and how to connect them with operating KPIs. And the third one I'd say is to use scenario ranges instead of focusing on false precision. I think the more volatile the environment, and we are in a very volatile environment right now, the single point forecast creates an illusion of certainty that is not very useful. So I tend to return back to my banking days, is always have base case, upside case, downside case, and have clear explicit assumptions and a probabilistic thinking whenever appropriate, instead of having over-polished failed attempts at precision. So I think those 3 core principles have guided us in being better at balancing both. And to give an even more specific example before I pass on to my colleagues for the comments, if I had to choose, and we had the discussion the other day, like if I had to choose between having a 72-hour refresh on like 5 key variables that explain 80% of the outlook, I preferred that in having a 6 weeks update process where I update every single data point and don't actually drive decisions. So I think that focus has been very helpful to me and the team, and that's a learning process that we try to carry to hopefully better that balance.
To that point, really resonates with me, where best-in-class FP&A functions are doing exactly what Lucas described, where you've got clean data, good process, like good enough process. But then kind of sometime 6 to 12 months ago, AI, machine learning comes in, and now kind of everything is available, everything all at once. And I think we're kind of going through those growing pains of, okay, you've got the clean data, you've got the tight forecast cycle, you've got the flash, you've got the forecast of record, you have the budget, and they all serve their purpose. But how do you get to then kind of retrust the data now that we have kind of generative AI and kind of these additional advanced analytics processes? So I think we've kind of come full circle, and now it's continuing the adage, the only constant is change. So that really fits.
Yeah, that's a good point, Teddy. And I think it is an interesting point you bring up. There's just so much information out there. I think one of the things FP&A teams, need to be mindful of is that, right, there is a tipping point, right? There is there is the risk of information overload. And if you can't package it up and deliver it succinctly to the, to the teams, to the operational teams you're working with, it could almost be counterproductive, right? So along that line, maybe we'll shift a little bit here. So in terms of all this information and all the processes and the demand for faster, better, quicker information, how is that changing the relationship between FP&A and the service line teams or the operational teams, within the corporation? So why don't we go to Peter for some commentary and insight on this topic?
Oh, looks like we just lost them. I think I can jump in on this one. And I think one thing I've noticed is, at least the business at SeatGeek is multiple kind of 10, 50 times bigger than when I joined, but the size of the team is the same. So we can't just keep multiplying ourselves to kind of do this linear traditional FP&A business partner coverage. I think over the last few years, kind of keep up with the, first of all, the business is bigger, we're doing more with less. there's more data out there. So we have to come up with kind of a new way. It's not just the traditional consulting approach. And really think about kind of creating these decision tools to kind of multiply ourselves to get those interactive models that aren't 50 tabs, that are more intuitive. We can essentially be designers and PMs and front-end and back-end engineers with a lot of these AI tooling. It's been great, and kind of giving these interactive models. It's a really exciting time to kind of put our fingerprints across the organization, kind of being at the center of all those cross-functional work streams. We now kind of owe it to the org to, pass that philosophy back to them, empower them with the clean data, the source of truth data, and be able to reflect that really dynamically back into all of the plans.
Yeah, if I can add a little bit on that, just to build on what Teddy was saying, I think like another key aspect that I see on that is having better collaboration, right, between cross-functional teams. Like one of the key success that I've seen on teams that operate finance well across organizations and in the broader business are teams where the financial decision process, the financial decision mindset is embedded in the decision process of every single team. So if you think about it, like I remember a couple of years ago, there were maybe 10, 15 years ago, a lot of discussion about innovation on the tech firms at that point. And I think there was an interview for one of the big tech companies asking like how they handle innovation, who is responsible for innovation within the team. And I remember the response was like, that is in our DNA. Like we don't have we don't need to have an innovation person on every single team for them to be innovative. It is in there. And I think for finance, it's kind of the same thing. If you have the financial mindset with our business partners, you know that the decision process will be vetted and have that mindset there across any parts of the business, regardless if you're talking about a marketing function, operations function, procurement functions. In general, if you make the good connection between the teams, you have this cross-functional relationship and knowing how the mindset operates. I tend to think that the business-wide thought process incorporates what finance knows best, like the numbers, the core hard values of results and every single thing that we want to achieve.
Right. No. Yeah. Thank you for those comments, Lucas. And I guess I'll just make a couple comments from my own experience because advocates, we've had a lot of growth over the past 5 years, both organically and through mergers and affiliations. And this business partnership model has been important. And we've taken a model where we have what I like to think of as like embedded finance, where we can build those cross-functional relationships. So we've got a corporate FP&A function, and we've got embedded finance FP&A functions that work together to really pull all those different data sources together, so we can get that one version of the truth, and that across all of our lines of business, we're all really reading from the same playbook and in the same set of numbers. So so there's a lot there. So yeah, I appreciate your comments, Teddy and Lucas, and it looks like we have Peter back on. So great, thanks for joining. Thanks for getting back online, Peter. So
no problem. Still happened there. Sorry about that.
No problem. So all right, so we'll move into the next question. Maybe you can kind of jump in and get back into the groove. So one of the things, so in this last kind of topic, we're talking about kind of FP&A and that business partner model. The technology came up, right? I think you can't really. It's hard to have a conversation about anything, much less finance, without the topic of AI, coming up, or machine learning, or any sorts of numbers of technology. So, as finance teams really move along that, technology continuum and look at more advanced analytics and AI, capabilities, what are the skill sets and capabilities that FP&A teams are really going to need to be looking at and examining and, potentially deploying internally to help kind of really fulfill, the FP&A mission. So why don't we, Lucas, maybe you could get us kicked off, and then Peter and Teddy can jump in.
Yeah, sounds good. I think, well, that is the question right now, right, Keith? I think like AI specifically and the capabilities, we obviously don't have all the answers yet, and adaptability here is key. But I think what I've learned the past couple of months trying to focus on the AI development of the company and in general for other ventures is to simply not know AI, but know how to combine it with financial judgment. There are things that I see in my mind for such a task. I look at data fluency. I'll explain each of them, but data fluency, model literacy, scenario design, and I think business storytelling. When I say data fluency, it is not too dissimilar from what we see when we started having larger companies, larger ERPs, but it is to make sure that the underlying information that AI is using speaks the same language so that the outputs can be consistent. So you need to make sure that there's appropriate data, translation data, governance across the entire organization. So we are talking the same language whenever an AI layer comes in, treats that data and brings some outputs, right? The second one, what I call model literacy, is critical. Like we don't need every FP&A leader to be a data scientist, but knowing how the model works, what is the ultimate LLM layer, then the secondary AI layer, and then how to mobilize that to produce the better outputs and how to get to better results is key. I had to learn and still try to learn like the art of prompting, like how to use a proper prompt to make sure that AI is not hallucinating, you're collecting the right data, you're making evident what also biases the AI is having there. Like you can talk with the AI, iterate on many platforms, but key aspect is always to make sure that it tells you what assumptions they are having that you're not seeing. If you don't ask them, the AI will simply assume something and you will not understand the answer. The third piece, I think, is scenario design. So when I think about AI, one of the key aspects that has been super useful is you can iterate on different scenarios very fast. So if you don't know how to ask the right questions, you basically end up in a landlock. So the ability to define the correct answers the correct questions is key here for you to, I think, as a professional, to use AIs to its fullest. And the final one, the fourth, is not new for anyone in finance, but I think is the ability to learn business storytelling with AI. So automatically having better analytics does not produce automatically better decisions. So you need to make sure that you are translating the outputs you're coming into the organization to whatever function, whatever challenge you have in the proper way. So you can't simply say, okay, ChatGPT told me that this is the best decision. If you know how to use that to the fullest internally and how to be persuasive enough with your analysis, and you have a good analysis, I think AI facilitates that, but you need to be mindful of that. That storytelling is still as useful as it was before AI was invented.
Yeah, I really want to pick up on that storytelling point, and I started my career in investment banking, like others on the panel, and 20 years ago it was about downloading 600 pages of this thing called a public information book that had about a company, a 10K, a 10Q, some transcripts. Kind of do this big exercise to read it overnight. You have highlights and sticky notes, and you kind of produce that summary. Well, I'd imagine today in those businesses, just with an AI prompt, you can kind of spit that out easily, automatically, and just kind of shows up in your inbox. So it really then goes to, what do you do with that information? There's a lot more information out there, so you want to know where to look, how to make those connections, and then how to digest and turn that into useful information to go out and win new business. And what I imagine is the job of the analyst is now kind of able to do manager and director level work. So everyone's got to upskill to really take advantage and understand those quantitative and technical skills, but then also really invest in the qualitative and the people skills as well.
Mm-hmm. Yeah, and I'll jump on that point as well, Teddy. I completely agree. I think, as Lucas said, obviously FP&A people need to understand AI. They'll need to understand how to use it, how to prompt, reverse prompts, and all that good stuff. But I think the real change is being able to really find the signal from the noise, as people say, because there's going to be so much data available, so much processing available, so much information that you can basically analyze. I think the important thing is being able to find those 1, 2, 3 data points that really tell that story that Lucas mentioned before. And then I also think it's actually the ability to communicate that. So it's not just can you write it in a memo, it's can you sit in a boardroom or an executive committee, can you convince the people in the room that your analysis actually leads to something? Can it lead to a decision? Can it lead to something that impacts the business? So I think FP&A, certainly senior FP&A professionals, have to really step up in terms of not only sort of creating the story, finding the key points, but transmitting that in a human way, not just through documents or through AI. So that's for me the big transformation that's needed here.
Yeah, excellent. Yeah, I'm really enjoying this conversation, and I'll say right now, I think the two highlights for me so far, it was Lucas, where your comment about better technology doesn't automatically mean better decision making is spot on, and then Peter, being able to separate the signal from the noise is that's critically important. I think there's a lot of potential for AI to help parse out and sort through and organize the data, but if you can't validate it and understand it and then translate that into actionable business outcomes or financial outcomes, it's just all noise. It's just all noise. And there is a lot of noise with IT, and kind of at my shop right now, we're spending a fair amount of time trying to figure out, is AI a product or is it a feature of an existing product, right? So those are, we're trying to figure out which way some of these, these things are going to break. So that's an area where there'll be lots and lots of rapid development. All right, so maybe at this time we can pivot and talk a little bit more, tactically about what goes into discussing how kind of all this discussion gets folded into some actual decision making. So maybe Teddy, maybe you can help us with this next transition here. So how organizations, so keeping in mind everything we're talking about now, how is FP&A working with organizations to help rethink capital allocations, in today's environment where the level of uncertainty is pretty much changes every couple minutes or as fast as you can refresh your your newsfeed browser, and there is a fair amount of shifting business priorities to try and keep pace with kind of all of the the rapid changes of direction that that businesses see kind of as an ordinary course of business, never mind when there might be questions around economic uncertainty given things that might be going on in your local and national business environments.
Yeah, definitely. And I'm going to start with my answer I would have given 3 months ago, and then I'll kind of fast forward to today. I think what I was seeing like 12 months to 3 months ago is things are moving really fast. The level of innovation in our vendors in the broader macro landscape is accelerating so much that we want to kind of shorten up the commitments. So just thinking about, for example, vendor contracts going from 3-year to 2-year to 1 year to month deals, because what we are investing in now another tool may 10x or 100x in 12 months. So really setting up the organization to really think and press about what those vendor relationships look like, and being honest about what we want to focus on internally versus externally. I think what we kind of fast forwarding to today, I think now that our kind of citizen developer tools and muscles are a little stronger, I think we're really taking to the approach of more build or buy, or build and buy with a lot of these contracts and decisions, and also thinking, hey, the cost of hiring a new person, let's also factor in the potential cost of AI to kind of support that role as well. So I'm seeing kind of the definition of, for many companies, the largest expense or investment on the P&L being its people, and is ever more changing as we think about what fully loaded costs are, what the return horizon is as well.
Yeah, if I can just jump in.
Please, Peter.
Yep. Okay, Lucas. I was just going to say, I think your capital allocation will depend very much on your investor, what you've got behind you. So, for example, I'm in the PE space, so I actually work for Blackstone. They have quite long-term investment plans, so therefore your allocation of capital in our case is relatively, you can invest longer term. But there are other PE firms, of course, have a risk profile that's different. They get into a firm, they flip it. So probably the capital allocation decisions are a little bit shorter. What I would say is that in today's world with this uncertainty, what I see is definitely those horizons have come in, so they're probably shorter. And when it comes to sort of CapEx or IT investments, AI investments even, I think the new sort of approach seems to be to have a lot more smaller bets on the table than like a big bet. So what do I mean there? You're more likely to invest in, for example, none of us know what the winning application will be, what the AI solution will be. So companies are actually investing in a couple or two or three, and then seeing which one actually progresses and then putting more money into it. So I think, return on investment is the lines are coming in, probably shorter ROIs, capital allocation, probably shorter time frames. But a lot depends on your context, your investor, and your risk appetite. That's my view there.
If I can build on top of that, I agree 100% with both of you, Teddy and Peter. And I think to build on what you're saying, Peter, about I think the PE space view, and I think some of the differences that I've noticed since I moved from the financial services side to the corporate function on a specific company is that on the financial services side, I saw that capital allocation was not always, but mostly a function of diversification. So you could work on a portfolio management level to look for diversification of risks that were inherent to different businesses and try to assume a better alpha in the end. When you're talking about specific business and now looking at specifically the food and ag space where I operate today, there's less space for that level of diversification. You're doing one thing, one business, even though you're trying to diversify sometimes customer bases, geographies. But then when diversification becomes tricky, one tool that I try to use from my banking days now in the corporate finance side is, I think, learnings from the project finance approach that I think the innovation teams in CPG space use it almost as a stage gate approach. So you're basically thinking of capital allocation on a risk-adjusted optionality. So what is the minimum amount of capital that you need to prove a point and then move on to the next one before you deploy more capital? So you are always looking for the completion of certain thresholds, KPIs, achievements, ROI, regardless of what a success metric looks like. And once those are achieved, then you dedicate a little bit more capital and go to the next phase. So you adjust not in terms of the risk for diversification, as I said, but more on a completion basis of a proof of concept or a specific hypothesis that you have. And once that is proved, you moved on to the next one, given that capital allocation, capital availability is not always something that is widespread for a business, especially on challenging times.
Mm-hmm. Yeah, no, absolutely. All really good points. And, certainly, if we look at the kind of the economic environment we have now, depending on where you're getting your capital, whether it's through, internally generated surplus that you've got sitting on the balance sheet, or lines of credit, or, debt or equity, the kind of the risk profile with those different pools could certainly play a factor as you start to pull all these data points together. So all great responses. Thank you. So thank you, panel. So thinking about this maybe even a little bit further now, how do we maybe pull this back into maybe a little more inward focus now? So we've talked about kind of the impact of the business partners, and we've talked about some capital allocation, and certainly we've talked about technology. But if we're looking at the FP&A teams themselves and how they actually go and do this, so maybe forgetting about the technical portions of the job, but what are separating FP&A teams today from kind of getting to this maybe optimal state of this embedded trusted advisor business partner model versus FP&A teams that are maybe still operating more as a scorekeeper or strictly a reporter of the numbers function rather than an explainer of the differences, right? So we talked about being the storytellers, right? So the number generators and reporters versus the storytellers. So Peter, maybe you can start us off on this thread.
No, perfect. And I think, Keith, you've given an introduction there. You sort of said it was not really the scorekeeper is more a technical role. And I guess this sort of business partner function is more the ability to tell that story, as you just said. So I think it's a human skill. And what I would say is there's a couple of things. I'd say it's the ability to ask good questions. So when you look at data, whether it be past data or you're looking at forecasted data, are you able to ask not just one question, but 2, 3 levels of question? So the question behind the question. So that'd be one thing, and I think that implies a sort of an amount of curiosity on the part of the FP&A professional doing that role. So in our teams, we know we have some people that are happy to crunch numbers, and we have other people that are genuinely curious about the business and really want to understand the business. And I think it's that second group that will, drive FP&A to become a true business partner. I think then the ability to challenge the business. So obviously learn about it, but also challenge the business. So that's a leadership skill. If you're able to sit down with business leaders, you're the FP&A guy or girl, and you have to feel the confidence to be able to actually do that, to challenge them. And another thing I'd say is actually speaking the language of business, because we finance guys, we just spoke a few things, investment bankers like Lucas, we tend to have our own languages. And when we're talking to a business, we have to make sure that we're using their language or the business language, not the finance language. So for me, there are some of the key things that will enable an FP&A function to really add value, look for that value, be able to articulate that value and add it to their business partners.
Yeah, I think the scope and the shape of FP&A is changing and evolving. And I think the groups of tomorrow are going to bring in skills, and actually need to own the data environment and the systems and designing the overall framework to be able to actually run the business. And from a capital allocation, capital markets, you're optimizing the dollars coming into the business. But then within FP&A, kind of like running procurement, running treasury, thinking about all these capital allocation decisions, also optimizing the money that's going out of the business. And I think taking this more comprehensive look to kind of go beyond the scope of what you can kind of record in the financial model or in the executive memo, and actually be able to kind of put your imprints on the business and be kind of embedded in that decision making and also the operations and making those turning that strategy into actual results.
Great. Yeah, no, both Peter and Lucas, yeah, thank you for those comments. Very, very, very spot on. I think if I look back over the course of my career, the FP&A teams that kind of I've worked on and run and people I've mentored, I think the FP&A professionals that have been successful, the most successful, have been those that can go into the business, understand the business, develop a level of credibility, showing that they actually have an interest and are willing to, as Peter, as you said, kind of talk the language of that business, right? And really have those discussions and not just throw, debt ratio and PE this and, EBITDA that, right? You really need to be able to take that and translate it into those business concepts so you can have that two-way dialogue. So all very very, very salient points there. So I think as we
just have one thing, Keith, because Lucas mentioned it before. He said, I think he said, you need to be able to find the one or two key points, the leverage points. Mm-hmm. And I think sometimes in FP&A, we in the functions I've seen, we tend to be so data heavy that we chuck out a million lines of data. Or no, you mentioned, Lucas, when you were talking about building a forecast or building a budget, you'd rather have 5 key lines, sort of Pareto style, that tell the story than have a really detailed forecast that is meaningless because there's too much data and it takes you too long. And I think that's part of our problem as well. We need to make sure that we keep focused on the key things and don't overload the business with too much data. That's another thing I've seen. Sorry, Keith.
No, you're spot on, right? That's the what's the phrase? Analysis paralysis, right? We want to, avoid that and certainly keep people on point. All right, so as we start to maybe round out this discussion, and before we get into some of the Q&A we'll have in a couple minutes, maybe we can start to get a little futuristic, right, in our view and discussion of FP&A. So maybe Teddy, you can kind of maybe take us home on this thread. So as we start to look ahead, what does the modern futuristic FP&A operating model look like, in order to be able to certainly support the fiscal discipline that we need to make sure is always embedded in what we do, but also provide that high level of support and agility to the business, so that that those two teams can really come together and work together seamlessly. What's the future vision for FP&A?
Yeah, I'll just kind of think about the future org chart and the skills and role profiles, where I think today, think of it as 90% it's us kind of investment bankers, corporate FP&A, really good at financial modeling, shortcuts, DCFs, all of that jazz. And I think the ratio is going to flip. So it's 90% there, 10% is kind of the technical IT systems. I think going forward, it's going to be 90% who can blend all of those skills together. The design the tool, engineer the tool. You've got these generative AI tools to be able to maintain and develop them. But also think about what's going to be the data structure behind it. So I think, like 2, 3, 4, 5 years from now, I think we're all going to be much more of an engineering mindset, kind of making these decision tools for the organization, and also kind of like codifying the strategy up front of how to program, how to kind of set the parameters of these tools, and then kind of shop them within the organization to enable them to kind of take that finance mindset and the numbers and the rigor, make the decision, kind of record that, and then kind of operate from there.
If I can add on that, I think like I'm terrible at predicting the future, and I think it's a very hard topic, especially nowadays where things change so fast. And whenever I go back into thinking, what will the next year look like, next 5 years look like, and I had a couple of discussions with my team this week. We were actually like discussing what our strategy is going to be to the next quarter, and I realized that the solution to that question came similar to this thought exercise we're doing here, thinking about projecting the future. But in my mind, it's always going back to the basics and think about our audience here. I would recommend them to think about this connectivity and this new network environment we're having and the deployment of AI, but try to be an FP&A person that's always very close to the business, and you always have, I think, 2 key things in mind to be able to navigate better this future. And I'll quote our panelist here. Peter said that the question behind the question, I think that is a good phrase that determines like what FP&A should always look like when thinking about the future, like not only what happened, but why that happened, and then try to adjust to that accordingly. And Teddy said about owning the data environment. And I think the best way to own your environment is to be on the front lines of the business. So every financial person, regardless of the industry, if you want to get closer to the changes that the future will bring to you in the next couple of years, be closer to the front lines of the business and asking those questions, owning the environment, asking the correct questions, and trying to understand. You're not going to have all the answers, but you need to be adaptable and close to the business to understand how that future is going to change and how to adapt quickly to it.
Yeah, and I think both guys made great comments. I mean, I think going to what Teddy said, I'm a big proponent of finance taking over technology. So if the CFO can take the CTO or CIO function, then I would do it. So I think that way you build your future. So I think what Teddy said about FP&A also owning the data, the models, I think that's one way to go. And coming back to what Lucas was saying, the other thing I think is it's more about leadership. So I actually think that I think we can all see that in the future, I mean, we can't predict it, Lucas, I'm with you 100%, but we can all feel that within whatever, 24 months, 36 months, the analyst roles are going to be done by agents, AI agents. I mean, we know it's going to be automated. So the pyramid's going to be inverted. I think there's going to be more need for leadership in FP&A more senior people in FP&A that can partner with the business and that are able to not just understand the data, but transmit the value of the data to the business. So that's what I see looking in the crystal ball.
Great, thank you for those comments. I think one thing I'll add, and then we can jump into Q&A. But over the past couple of years, here at Advocates, we've actually done some work to recruit people from our different lines of business into finance and FP&A. And these are folks that are, like, one example is we've got a very senior level finance person now that spent 20 years as a licensed clinical social worker, working in our clinics. And over the course of those years, had an interest in the business and spent a lot of time studying the finance and developing a business acumen, and then transitioned over onto the finance team. And that person really helped bridge kind of that divide between kind of FP&A and operations. So I think there are opportunities for people to have a wide range of skills for sure. So okay. So with that, I know we've got some questions in the chat box, so I'll read out a question, and we've got a couple of minutes. We'll do Q&A for a couple of minutes, and then I'll give each of our panelists a minute to give any kind of closing thoughts or comments. So for the first question here, this started to come up during kind of some of our earlier conversations. So one of the questions from the audience is, with AI and automation reshaping finance workflows, where do you think human judgment and leadership become even more important inside the FP&A function? So I think we brushed up against this topic earlier during the conversation, but I guess I'll open it up and see if any of our panelists want to jump in and get us started on this one.
Yeah, I mean, I think we have mentioned it before. I think it's a matter of, as both guys have mentioned, being able to tell stories well. And also, as we mentioned before, just being able to really find the key points. So I'm a big fan of Pareto. Normally you find that 80% of your story, you can tell it with 20% of the numbers. So finding that really key insight that will drive the business value, I think that's the real skill that needs to be learned in as AI becomes more widespread. That's my view.
Yeah, I would add on top of that, I feel like, again, we brushed on this topic from different directions, but I think human judgment does not get out of the picture when you're talking about AI and automation. I think it gets even more important because of it. You're running a machine that's doing an analysis with a bunch of questions, trying to bring you outputs. If the questions are not good, the outputs are not going to be good. If you don't understand what assumptions are being used by the model, the outputs will be either meaningless or wrong. If you don't understand, like, how does that piece of information connect with the business, your AI won't tell you how it connects. So I think human judgment is paramount to have the new phase of business, especially when the velocity of this transformation of data into insights gets faster. And definitely need human judgment to make sure that operates efficiently. Otherwise, there'll be a lot of hallucination happening on both sides.
Right. Yeah. So we still need to apply look through with all of this. We still need to apply, like, our critical reasoning skills and looking at things and really questioning it. And it's whether it's human or AI, looking at an output and saying, does this really make sense? And then understanding the drivers behind it, is certainly critical. We don't want to outsource, or kind of delegate that down to AI. Even with all the potential and benefit that it is giving us. So, all right, I think we got time for at least one more Q&A question. So I'll go to the next one and see where that gets us. So this question from the audience is, as finance leaders, how do you encourage stronger collaboration between FP&A and operational business units that may not naturally think in financial terms? So I'll get us started on this one. I know earlier I mentioned the kind of a model that we've moved toward at Advocates was, as we've grown, we've moved from strictly just having like a corporate FP&A finance function to a kind of a hybrid distributed model where I've got, we have FP&A and finance teams embedded in our major lines of business that are sitting on those SVP and those business unit CEO, their staffs, and interacting with those leadership teams on a daily basis to build those those tighter collaboration, build credibility, and help really make sure that the financial and business terms are translated and reconciled. So I think having getting closer to the kind of where kind of your product or your service is delivered is certainly very important. As finance people really need to understand how the business operates at a very practical and tactical level. So I'll pause and I'll open it up to our panelists for some additional thoughts.
Yeah, this is where we go from it's kind of our job to translate the business into terms that the business understands and can operate and can actually drive the business. And I can tell you, non-finance people are thoroughly unimpressed with the very fancy 50-tab Excel model that has macros and case scenarios and offset formulas and all the fancy stuff. Like, how do you get something that's digestible, usable, and just makes sense with no explanation? I think that's in kind of this age where it's super easy to make content, super easy to make models, and really impressive stuff coming out of the third-party vendors and AI tools. And the other thing is that this is also crazy to say, but the worse these AI tools will ever be at this point going forward. They're only going to get better, and it's going to be kind of our jobs to translate that and make these tools and more useful to the organization to help support decision.
Yeah, and if I could just add, Keith, the model you just described is what I've seen in a couple of organizations I've worked in. That's what we've done here as well. I think when you send FP&A into the business, so you have people, whatever the business line is, there's an FP&A person assigned to that business, and they sort of get embedded. They may even sit with them, as you said. I think that's a really good way for them to really be seen as part of the team. And then that sort of friction, I think that was the question was implying, between whatever the business area is, operational area, and FP&A, it sort of gradually goes away as they begin to sort of see eye to eye. So that I've definitely seen that working.
All right, great. No, thank you for that. So we're pretty close to the end here. So I think I'll take the last minute or two and just open it up to our panelists to see if they want to make any kind of closing comments.
I have one quick final comment. I think elaborates a little bit on the final question we were talking. I think it's a very important one. So we talked about like the connection between FP&A and other teams, and I think Peter brushed throughout the conversation about the need to talk about the language of the other person, translate the financial jargon into their day-to-day. So I would give like 2 tips for finance leaders looking to have a better connection with other teams. One is that learn how to speak their language, and 2, I would suggest learning a little bit more about the interest behind the positions. So every time you're talking to a different team, they may have a position and they have that idea in their minds, but there's always an underlying interest behind the anecdote of the 2 brothers splitting an orange. Not sure if everyone knows it. One wanted the crust, the other one's the juice, and they were trying to split the orange in half and never found a way until they understood what they needed that for. So my recommendation here, final thoughts, is focus on learning your business partners' languages, and 2, try to identify interest behind the positions, and you'll be a successful FP&A leader.
Thank you, Lucas. Peter or Teddy?
Yeah, sure. I mean, I guess I would say 3 things going on our discussion. I think the first, referring to what Teddy said before, I would say get your data clean, get it aligned, get it solid, control the process, especially with AI, because that if the data's good and the AI model's good, that will sort of automate your shop, your FP&A area. So that's number 1. I'd say 2, we've sort of touched on it, but I would say the talent in your team is important, because I think as we go through this transition to have more AI, more automated models, I think some people will step up into that new world, and maybe some people that you have in your team unfortunately won't. So I think Jim Collins, he said, get the right people on the bus, get the wrong people off the bus. And sometimes you have to do some soul searching, and you need the right team. So I think talent is another important thing. And the third thing is we sort of mentioned it almost to death here, but I think you have to look at how you communicate as the FP&A leader. You stop communicating like an analyst and start communicating like a leader. So speak that language of the business, be very, very clear on what you're trying to say, be concise, and sort of step up your game. And if you do that, I think the FP&A job will be future-proofed.
All right, thanks, Peter. Teddy, any quick comments here to wrap us up?
Yeah, I'd say we're kind of at the onset of one of the biggest upskillings that we experience in our careers, and let's meet people where they are. We've got the early adopters. Now it's time to stoke engagement all across the organization. Someone's going to have to be kind of creating those enablement playbooks, but also just kind of keeping on it and keeping the pace and the scope of innovation as high as possible.
All right, great. No, thank you for that, and thank you to the audience for joining us today. I know I learned a lot, and I've got a lot of notes I'm going to go through after this, after we end this broadcast. I think with that, I'm going to throw it back to our moderator, Michael.
Thank you, Keith. Thank you, Teddy, Lucas, Peter. This was a wonderful panel discussion. I also want to thank everyone else for joining us today. Now, this session, along with all of today's content, will be available on demand following the event. Our next session will begin shortly, which will be a thought leadership titled AI in SAP Business Cloud, Focus on Planning and Analytics. Please remain on the stage, and the next session will begin automatically. We look forward to seeing you there. Keith, Teddy, Lucas, Peter, thank you so much.